Good evening, everybody. Thank you very much for the opportunity. I'm going to go through this fairly quickly. This presentation is on our website, so what you'll see, I won't be talking to everything, but if you go into the website, this is more or less what you'll see. What makes DRD different as a gold miner is that all of our resources on surface, we are reprocessing most of the tailings that were left behind in and around the Johannesburg area, where we have an 11 million ounce resource, which we're slowly but surely working through. Our company is fully compliant with the BE code. We have an actual 26% BE participation, equity participation at subsidiary level, whereas also where we're holding our license. So you don't have to look at a relative value calculation or a see-through calculation or a flow-through calculation. It's a 26% participation at subsidiary level. We listed both in Johannesburg and on the New York Stock Exchange, and we trade about 150% of our market cap annually on the New York Stock Exchange. Market cap at the moment is about a billion rand, and you'll see a list of the more prominent shareholders on our register. We've had an increase in share price about 40% this year since December. We had a fairly tough year last year, but we seem to be on a slightly more stable base or stable platform now, having made a number of changes, and hopefully we'll be able to sustain that share price growth. It is off a very low base compared to where we were about 2 years ago. The core theme in our strategic thinking is that of sustainable development. It is a company that is in and around the Johannesburg area. You simply cannot mine in an urban area of that size without being very sensitive to sustainable development in respect of all 5 capitals. In the absence of financial capital, you're not a business, you're a movement or an organization. You've got to make money, but then at the same time also be sensitive to social, human, technology, and nature capital. And that's what we do. So about a 60-kilometer footprint from east to west. We start reclamation work in Roodepoort, and it goes all the way back to Springs. 2 million tons per month is what we process through 2 plants, and it's all by way of hydro mining. There's small patches which we do mechanically or through with loaders, the higher grade sand operations, but it's mostly tailings with hydro mining, as you could see the chap standing there looking at the water jet. So insofar as the strategic focus aspect is concerned, I think I'll get this right eventually. All right, optimize volume play. It's important that we achieve volume. We are very sensitive to volume, and therefore we use mostly a mechanized process and a technology-driven monitoring process. Everything is done by way of remote-controlled signals that are sent through to a central console. It's also very much a focus on research and development to see if we can get better extraction efficiencies. We want to make sure that we'll work towards a point where the amount of gold that we can produce and the amount of gold that we have to produce, that we put a bit of daylight in there, and we are increasingly opening up that margin through better extraction efficiencies, and now also by way of an increase in our volume capacity. Everything automated, the monitoring, where deep level underground mines have approximately 70% of their costs in labor and electricity. Ours is closer to 40%. And we don't really have labor in the sense of workers. We have labor in the sense of operators in and around the Johannesburg area. So, insofar as sustainable profit is concerned, our technology is geared towards both the improvement in extraction efficiencies and also volume capacity. We're increasing volume capacity by about 300,000 tons per month through a small project that we're launching now. 23 million rand project that's all internally funded. A lot of focus goes into youth education, youth development. That's the social part. We built a lovely college that we're handing over to the community now, 45 million rand investment over 5 years that has become self-sustainable. Human capital, we think that the days of labor in the traditional sense of the word in South Africa is something of the past. If you pay somebody 12,500 rand a month, you need to get 15,000 rands worth of value. And that you don't really find in moving stuff around. So a knowledge-based labor force is what we're working towards. And we're overlapping that. And that's where the shared value concept comes in. We're overlapping that with our social value creation in positioning or endeavoring to position those positions that will ultimately become redundant in our local economic development. Our nurture focus in and around the Johannesburg area with a very large footprint. You simply cannot be indifferent to nature, and that's why a lot of work goes into dust preservation. We spend the better part of 400 million rand over 5 years with the vegetation of our mine dumps. Many of you would drive past our tailings dams and not even know that they're there because they're green, mostly green. A lot of water goes into these systems. We top up our water circuit by 30 million litres per day, and you can't just draw that out of the system, out of Rand Water. You've got to make use of alternative water sources. So sewage water and treated AMD is increasingly becoming part of our water supply. And then, of course, dust. It's all about dust, those mine dumps, reducing the amount of dust, and that you do by way of vegetation. And you could see a photo with the Joburg skyline in the back of what a vegetated dump looks like. We've returned just over 200 hectares of land back into society for development over the 20 odd years that we've been involved, and we'll return probably double that over the next 10 years or so. The key features here: we made approximately 10% of our market cap in free cash flow in the quarter between the 1st of July to the end of September, and that's an indication both of robust cash flows and a very low share price at the time. And we are adding to our cash balance at the moment. We have approximately $20 million in the bank. That cash balance grew by 19% in the 6 months between the 1st of July through to the end of December, and we retired a substantial portion of our short-term debt over that same period. So we're quite happy with the net cash flows in the operation. Operating trends you'll pick up on the slide if you go through it on the website. Strong income statement, very strong balance sheet, current ratio about 1.3. The long-term liabilities, or rather the provision for environmental rehabilitation, looks like a large number, but it gets worked away as we go along, because by the very nature of our operations we reduce our rehabilitation footprint. You can see the half-year numbers are pretty robust, all trending in the right direction. And insofar as our investment case is concerned, we've been paying dividends now for the last 7 years. So despite the fact that we had a really challenging year last year, we managed to not interrupt our dividend flow, and we paid a 7th consecutive dividend. We have a very conservative approach to our capital structure. If the share price is undervalued and we've got spare cash, then we have in the past bought back shares, and we might do that again. We take full exposure to the gold price, so the difference here really is a fully mechanized, uninterrupted gold play that has more of a factory risk or a processing risk, but that provides you full exposure to the gold price. Low labor component, not really exposed to the extent that other mining companies are, to safety issues and to power issues, and fully mechanized. So a mining operation with a bit of a difference. Thank you very much.